Show me the money. That is what gold traders are saying this week, the first week here in August, as gold for the first time ever closed over $2,000 an ounce. Now, gold started out 52 weeks ago and roughly in the $1,400 an ounce range. Now, obviously it's gone up, and it's gone up tremendously, and most true economists and smart traders believe that this is just the beginning, that we could see gold have another run up easily to $3,000 an ounce by the time that everything kind of balances back out. Now, why? Why is gold going crazy, and why every time that we kind of run into financial trouble, why does gold prices go up so much? Okay, so let me break it down to you. So first, these are the four things that really give gold their value. So first, it's used as an inflationary hedge. Second, there's a shrinking supply of it. Thirdly, dysfunctional government policies play into it. And lastly, it's a global store of value. So let me break these down to you kind of one by one. Inflationary hedge, what does that basically mean? What it means is I am very, very concerned right now that every dollar bill that I have is not going to buy me the same amount of goods in 3 months. Why? Because the world is looking at all us stupid Americans as we print trillions and trillions of dollars to stimulate our economy with nothing backing those dollars other than the belief that when I go and I use that dollar to pay for something at Target, that Target believes that that dollar has value, and that value is the same value it was previously. The problem is, as a country that imports so many items from so many other countries, what happens is all these other countries out there being like, dude, these Americans are going crazy just printing money everywhere. They're in so much debt right now. The only thing they do is they pay their debt on time, but they're in so much debt and they're just printing like crazy. You know what? Their dollar isn't as strong as our currency, because our currency, we don't have that much debt. You know what? And we're not printing all this free money out there. They're a maxed out individual, basically. America is an individual that, yes, we may have a 720 credit score, but we have 15 credit cards that are completely maxed out, and we keep going and getting new credit cards and maxing them out. And yes, we're making our minimum payments on it, but we're just getting more and more and more in debt. And that's what the world is looking. So when we go to buy goods, they're like, you know what? I don't know if I want to just keep getting paid in dollars. And it's fine if you want to pay me in dollars. Well, now the free market determines that your dollar compared to the yen, let's just say, isn't worth as much. So every dollar, let's say, got me 10 yen. Well, now every dollar only gives me 8 yen. Well, what happens when I need to buy something from Japan, right? Well, I got to give them more dollars because my dollar bill doesn't get me as much buying power. And that is inflation, and that's a devaluing of our dollar because prices go up, not because the cost to buy that in Japan really went up for the Japanese market, but for us people importing these goods, it takes more of our currency to buy it because we are a debt-ridden, in trouble society. So what happens is a lot of smart investors, and myself who has gone through a nasty recession 10 years ago, now in my late 30s, I know what's happening. So what am I doing? I'm loading up on gold, I'm getting out of equities, I'm moving money out of cash and cash equivalents, checking accounts, savings accounts, and I'm moving it into assets that are going to prevent against a devaluing of our dollar, because it's happening, okay? It's happening. And I'll get into another one in a later video about Bitcoin and my beliefs on that, but I want to stick on gold right now, okay? The next thing, shrinking supply. What people don't know is, why is gold so valuable? Because you just can't make it. You can't go and just make gold, right? No, there's a finite supply of it, and to bring a new gold mine online takes 5 to 10 years. So it's not like somebody can just go get a bunch of gold. And obviously we've gone ahead and we've mined a lot of gold, and it's harder and harder to mine this gold. Well, you know what the great thing is now with these mines that have been online for 5 to 10 years, well, all that cost is already done. And when I go to mine that gold on an existing gold mine, the manpower and the dollars it takes me to pull that amount of gold out is the same dollars if gold's $1,000 an ounce or $2,000 an ounce, right? But you know what happens if gold sells for $2,000 an ounce instead of $1,000 an ounce? All those gold mining companies are making buku bucks because their cost to obtain that is the same, but their profit just went through the roof because gold just shot up, right? So gold miners is another play, which I'll get into here at the end of the video. You'll see some of my favorite gold picks and the best way to actually invest in gold right now. Now, dysfunctional government policy. like I was talking about, printing money and giving stimulus everywhere. We are just spending on credit cards like crazy right now as a country, as with the government. And so because of that, people are really concerned, like this is getting out of hand. So people are really worried, do I really want to hold on to a bunch of these US dollars when they're just printing trillions and trillions of dollars that they don't have a way to pay for it? Because we already run a huge loss as a business, as the US government, as a business, as one of the worst businesses in the existence today because they lose money every year. So do I really want to keep trusting this business that keeps losing money and basically just printing free money and giving it out? No, I probably don't. I want to put it in something that they can't manipulate. And you know what? The US government can't manipulate gold, okay, right? Gold has a global store of value, which means if I have a bunch of gold and I leave the United States and I go to India, you know what? Gold's gonna be worth the same, right? I can pay for it everywhere. Everywhere will take gold. Gold is a global store of value. And everybody with money, when they're concerned about the world and global uncertainty and potential, their currency falling, inflation going up, they move to gold. Because you know what happens? When prices go up for material items, gold goes up with it. So that's what the nice thing is. So rather than having your dollar bill lose money while prices go up, your gold goes up. So I want to switch it. Here's $2,000, give me a bar of gold. Now my ounce of gold, as everything rises, sweet, I'm getting that capture. What happens over here if I'm using my $2,000 in US dollars? Now I want to take that $2,000 in US dollars and I want to go buy something. It's not going to get me as much as what it would if I would have switched that to gold and let gold rise with it. So I am a firm believer that I can't say the exact time frame, but I don't think $2,500 to $3,000 an ounce is too far in our future. I really think with the global uncertainty we have, with the mass stimulus, with just being an insane amount of debt, I really truly believe that we could see a $3,000 ounce of gold within the next 24 months. So I think that there's some really cool plays other than taking physical gold. Now what you can do is there's some great plays or buying gold EFTs, which is basically a group of stocks put together as an electronically traded fund. Or what you can do is buy gold mining stocks and silver mining stocks. Silver is another great play because it's another precious metal. It's the sister of gold, obviously. So on the end screen here, you're going to see some of my favorite picks that I've seen for gold miners. And yes, they have gone up, but they are not done on their run. So maybe buy on a little bit of a dip. You see a day or two where maybe you see a little 3 to 4% decrease in that stock. Go in and dollar cost average in, meaning don't go all in with 10 grand, buy $1,000 a day and just keep dollar averaging in. So if the price falls a little bit, you're buying a little bit each day to get a great blended average on that price. You can also buy physical gold, and whether that's gold coins, gold bullion, and you can do that. Most places will require you to buy a decent amount. They'll usually require you to probably buy somewhere around 100 ounces of gold right now, which obviously is $200,000, so it's not an easy way to do for a lot of people to want to do that. Plus, it's a pain in the butt to store it. But trust me when I say this, you need to have a diversified portfolio. And if you're all in stocks or you're all in cash, I strongly suggest moving a good portion of that to gold, whether that's playing gold through physically buying gold, gold mining stocks, gold EFTs, and or silver. Silver hit $26 an ounce, and it's another really good play because they'll go up with it. We are just in the beginning of really seeing a devaluation of the dollar. I really see over the next 2 to 3 years a continued decline in the dollar, much like what we saw in 2008. Now, when I say the value of the dollar goes down, it doesn't mean I think the world's going to collapse. What it means is our dollar, because we have printed so much money, is not going to be worth as much as it is in 6 months as it is today. So you want to move your money out of that and put it into things that aren't going to be deteriorated and eaten away. So check out that screen, leave comments below, and I'm happy to answer anything you guys can.